guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. Wall Street's main index said held near to most loss on Friday after a profit warning from global delivery bill where spoken investors already worried about aggressive rate hikes from the Federal Reserve tipping the economy into recessions. The benchmark fell below the 3,900 mark seen by many traders as a case for level, stoking speculation that there could be more selling in equity markets. Shares of its crop plunged and were on pace for their worst day on record after the company said a global demand slowdown accelerated at the end of August and predicted that it would worsen in the November quarter. All of the 11 S&P sector declined, led by a 3% fall in the industrial sector. The Dow Jones Transport Average Index dropped 5%. What people are worried about is this: the canary in the coal mine. We start to see some warnings from some companies across different industries suggesting outlook might be worse than we had been pricing it, said Todd Lowenstein, chief equity strategist of the Private Bank at Union Bank. The market is in a sort of tug of war for the most part. On one hand, you have these rapidly deteriorating fundamentals. On the other hand, there was this what I call a misplaced hope for short-on resurrection of the Fed pivot. The market is incessantly coming the terms that the Fed is not going to be there to save the day. The U.S. Fed is really expected to deliver the third straight 75 basis point rate hike at its meeting on September 20 until 21 after recent data failed to alter the expected course of aggressive policy tightening. Adhering to the summer mood, the World Bank projected that the global economy may be inching toward a recession, while the International Monetary Fund said it expected a slowdown in the third quarter. September, which is seasonally weak period for markets, will also see the Fed ramp up the unwinding of its balance sheet to $95 billion per month, a move some investors might add to volatility in markets and the economy. Meanwhile, every week of the monthly option expirations ending on the third Friday of every month has been marked by a greater than usual volatility this year, as options hedging activity has amplified market moves. Goldman Sachs strategist said in a note that about $3 trillion of options are set to expire on Friday, including below single stock options. On average, the S&P 500 has fallen 1% in option expiration weeks compared with an average weekly gain in non-expiration weeks according to Reuters analysis. The CBOE Volatility Index, also known as Wall Street's Judge, all the three indexes are set for a sharp weekly fall, with the tech-heavy Nasdaq down 6%. This landing is used on numbered references for the S&P index record number new 52-week hike and 53 new lows, while the Nasdaq record 7 new hike and 281 new lows. The futures down 190 PTS. FedEx was Michigan sentiment in focus. U.S. stocks are seen opening lower Friday, heading towards another losing week on concerns about futures economic growth, exacerbated by an earnings warning from delivery giant FedEx. The New equity average closed lower Thursday, heading for losing week in 5, with the tech-heavy Nasdaq Composite leading the way on course to drop 4% this week. It was weekly drop since June. The Bird Brazil is down 4% so far this week, while the blue chip Dow Jones Industrial Average is so far set to drop 7%. The latest bout of weakness comes as inflation for August proved to be harder than forecast, something that could give the Federal Reserve reason to continue on its aggressive monetary tightening path. So the likely detriment of futures economic activity, the Fed is widely expected to raise its benchmark rate another point next week as it did in June and July, but the possibility of a full 100 basis point hike has increased since Tuesday CPI release, adding to the negative sentiment with the news that fits an industry bellwether reported disappointing first quarter numbers and withdrew the financial forecast it issued just 3 months ago, citing slowing global demand. Its stock slumped 19% pre-market. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.